All right. We're live.
We're live.
Recording.
And we got a new name.
New
Official new name.
No BS real estate show.
All right.
Sitting here in the corner of your office. So I've got to
Sitting here BSing on
real estate. So I was listening to the statistic because I'm now doing all the podcast uploads and all that. And I'm like, I don't remember how to do any of that stuff. So I'm sitting there in the sky, like YouTube University, right? You just start going through and looking at all the different, like, hey, I need to know about this in a podcast, whatever. And so I did not know this. 90% of podcasts don't make it past episode 4.
Really?
Yeah.
People just get burned out.
I guess they can't talk after 4 episodes. I don't know.
I don't know. Yeah. I guess we don't have to worry about that. You and I could probably sit here and talk until
talk all day long.
Oh, dude, it's midnight. We got to get home.
Yeah, it's time to go home, man. I got an event tonight. I got to be at, so I can't be jibber jabbering all night. But
I do too.
I heard over the radio. So the California legislature just approved a 17% increase for State Farm for homeowners insurance.
Oh yeah, because it's regulated.
And then get this, 25% or 20 something percent for condos for like essentially it's renter's insurance, right?
Right.
However, if you're renting a house, like 38%. Jeez. And I told everybody, I said, as soon as those fires are blowing through the state, I'm like, here it goes. Like the premiums are going way, way up.
Just like when we have 2 or 3 hurricanes hit along the Gulf Coast, and all of a sudden premiums go up along the Gulf Coast.
Well, and State Farm asked for like 21 or 22. So I'm like, they're just going to offset that with everything else like out here. I mean, we're all paying for the California wildfires.
Yep.
So it's absolutely insane.
When we have a hurricane, everybody else pays for hurricanes. And
that's right. Yeah.
When tornado hits Kansas, we all pay for the tornado.
That's right. Yeah. Yeah. And I keep thinking, even if you're out of Hurricane Alley, like you're like, okay, insurance will still be cheaper. No, because you've got hail and all that other stuff. And yeah, it's an absolute mess. So,
well, another interesting fact that I got actually kind of right before I walked in here, I had one of my big general contractors in commercial real estate send me a statistic that said basically they broke it down by construction category by materials, just materials, not labor.
Okay.
And so they broke it down from COVID, post-COVID, so into 2020 until now, and how much each one has gone up. And some of them are ridiculous. Some of them over 100% increase.
Dude, I would send that to me. I'd love to see it.
I'll send it to you.
Okay.
The average 45.67% increase.
Wow.
4 years.
Yeah, that sounds about. I did
that's over 10% a year.
Yeah, for this mediation I'm in, I literally pulled off because they're like, well, where'd all the money go? And then you see all the books and everything, and I'm like, no. So I started pulling just from the Fred database, cost of lumber, cost of material, because they track all that at the Fed level. But it's interesting, you've got your GC down here.
I'm sure it says where he got it from.
I figured he'd just pull it out of his books.
No. He went on some CPI website and pulled it all down. But yeah, I've also have a Bureau of Labor Statistics, the BLS.
Yeah, BLS.
So
materials are up 50% in the last 5 years. Man, that's nuts.
Just from 12 months ago, it was 12 months ago, it was up 40% 12 months ago from COVID, from 2020.
Yeah. Yeah, 10% a year. It's crazy.
So this year's been light. It only went up 6% from 24 to 25. Only 6%.
Yeah.
Right? Pre-COVID, like materials went up 2-3%, right? Maybe.
Yeah, maybe.
Right?
Wow, that's nuts.
And then once you have the one anomaly year where a hurricane blows through and everybody wipes out Lowe's and Home Depot, and then they go up 5 or 6, 7%, right? 1 year, but never 10-12% a year on average. That's crazy.
Well, I shot a note over to somebody. I'm on X now a lot for whatever reason, and arguing with
it's because you're under 30.
That's right. Yeah. So arguing with some of these housing experts, and they're like, "Oh, this big housing crash is going to happen." I'm like, "If it happens, it's going to be over quick." But I said, "If there's even one, do you know how much it costs to build a house?" So there was a builder in there, and he was chatting it up like, "Hey, y'all don't understand." And I said, look, when Corey and I are running numbers on just the horizontals, we're at 100 to 125K an acre.
Oh, yeah.
And then at $125 a foot build cost, like no one's going to be building homes if the median home price drops to $250,000. Like it's not going to happen.
The only way to buy a house nowadays under $200,000 is if you're not in a city, not in a major city, so not inside Houston, right? Or you're not in a good location, right? Because if you're in a good location, and I'm not talking about a great location, I'm not talking about going living in Rice Village or River Oaks. I'm talking you live in Cypress, just about anywhere,
right?
You live in Katy, just about anywhere. You're not buying a house sub 200.
No.
There's not. I mean, I'm 30, 40-year-old houses. I don't care. Unless it's dilapidated, you're not buying it. I mean, even the flood homes over here in Bear Creek that you picked up after Harvey for what? I mean, you bought some.
I bought some of them. So the least expensive one I bought was 50.
Right.
And that was 2017. Now, remember,
and that same house today,
250 grand,
maybe more, maybe 350.
It's crazy, absolutely crazy. And looking back on, because I remember they were still calling us from that neighborhood, and I should have just ridden the thing all the way up.
Yep,
just ridden all, because
it's easy to say now.
It's easy to say now, right? But
the time you're like, buying it for 50, I'm putting 50 in it, and I'm flipping it for 180, 190.
Right. Yeah.
I'm making $80,000-$90,000 a pop on them. Why am I not flipping them all over? Right.
Right.
It's easy to go back and go, wow, if I just held them, I could have made 250.
Oh,
right?
Yeah. There was a guy bashing Dave Ramsey in 2015 when Bitcoin was $500 a coin. And I said, so I replied, I'm like, so how many did you buy? It's like, come on, man, that's ridiculous. Right.
Yeah.
So, but anyway, to go back to that whole cost of housing piece, I told these guys, I was like, you don't understand how freaking expensive it is to build a house. And then I was looking at, yesterday, I spent a lot of time in Matrix, and I was doing a couple of different things. And I was really looking at the cost per square foot, let's say purchase and rehab, and revenue per square foot on the lease side, right? So the reason single family are so much more expensive I'm going to say this wrong, and it'll make sense in a minute. But if you look at how much single family costs on a cap rate basis, it's way more expensive than just about any type of real estate.
Now explain cap rate, because everybody's going to go through.
So
because you and I understand cap rate. Everybody in my office who's in commercial understands cap rate, but if you're not in commercial real estate, you have no idea.
So essentially, it's a net operating income over the value of the property,
right? And
it'll tell you, that'll give you the cap rate, which is a percentage. And I don't want to get into interest rates and cap rates because people seem to think they're kind of the same, and I'm like, they're not.
They do correlate, but they're not the same. But it's simple math for anybody that's listening. If you have a rental house and you buy the rental house for $200,000 and you rent it out and you make $20,000 a year profit, you take $20,000 a year divided by 200,000, you get 10%. Your cap rate is 10%.
It's 10%.
So that's simple math, so you understand what cap rates are. And so, in reference to what you're saying, today's market, if you're buying industrial, it's still around 5 to 6 cap. So you're again going back to the same model. 200,000 divided, you make $12,000 in NOI. You buy it for 200,000, it's a 6 cap, 6%, right? So apartments, they're running 6 to 8% right now, 6 to 7. Some of them you get at 8 cap rates. Storage is running anywhere, if we know this for sure because of yours, that you're selling, that we're selling down there in Alvin. By the way, somebody listening wants to buy a storage unit.
Yeah, we got one
complex. There's a great one, 128 units, all like freaking might as well be brand new. It's 99% brand new. Great location down in Alvin that we got down there. We're actually come make us an offer. It's you can get a good deal on it right now and make a lot of cash flow. So but generally speaking on those, they're running anywhere from 5.5 to 6.5 cap rates on those, depending on what you're buying. And so as you can see, and then office is an anomaly. The cap rates all over the place. You got cap rates at 8-9% and some cap rates at 20-25%. Just based on the fact if you're buying Greens Point, they're like,
oh yeah, crazy cap rate. If you can get anybody
40 cap rate, right? But no one wants to buy them because it's Guns Point. You can't freaking rent them. So, but no, going back to your point, like single family, you go buy a new house and try to rent it out. Cap rate's like,
it's like 4.
Yeah,
I was running the math yesterday. I'm like, how many houses? Because there's almost nothing under $200,000. So you're between
Not new. Well, you can't. There's nothing new
There's nothing new. Yeah.
unless you're buying
Unless
maybe a
you're
1-bedroom
literally-
condo somewhere.
Yeah, or in the middle of nowhere.
I don't even in the middle of nowhere because I mean, your building costs are still the same. Oh, no difference is the land.
Where was I?
I mean, how much is build cost on a minimum build cost on a house today? It's got to be what 140.
I think you can get it to 100.
No way.
But you are like really, like it's real.
Like don't sneeze too hard. Your cabinets it might fall apart.
It's like the worst RTDs, and it's the thin little quartz countertops. I mean, it's not sexy. It's really
You're probably for that you're putting laminate in for.
Oh yeah, but we could get it down to about 125, and that's like
like
what
typical
your rental property looks like.
Typical builder grade.
Yeah,
125.
125. And
so I mean, just think about that though. A 2,000 square foot house is $250,000.
Yeah.
Build cost.
Yeah, just
not retail purchase cost. Build cost,
and that doesn't include GC and all that,
or land, or anything else.
Yeah, the development costs, all that other stuff. So
it's almost impossible, even if it's in the middle of nowhere. It's you unless you're buying a 1,500 square foot house, and then you still can't get it for 200,000.
So what's interesting is when you look at like plumbing is a good example. So plumbing drives a lot of costs. So is electrical. Like you still need a panel. I mean, the smallest panel, isn't half as much as the biggest panel, right?
Right.
And then you look at when you look at just water, a plumber is going to charge you on number of faucets, number of drains. It's that simple. So even if it's a
$500 to $600 per fixture for water, and then additional $200 or $300 for sewer,
right,
per fixture.
Yeah. So when you look at a 3-2 1,500 square foot house or a 4-2 2,500 square foot house, the major cost drivers are almost the same, right? Plumbing, electrical are going to be almost the same.
Yeah, because you got 2 bathrooms on both.
2 bathrooms, got a kitchen, right?
I mean, really, your additional room that you're putting on there is, well, if we do it with, it's probably what, $80 a foot to put another room on it?
Yeah.
So you put a 10 by 10 on there, it's
like
$8,000 to probably up your value by $20,000.
Oh, easily.
$25,000. Yeah.
So what's interesting is I'm sitting there and I'm looking at this and I'm like, if you really look at the value of single family real estate, and I said this years ago, I'm like, rents are going to get to the point where they can't keep up with values.
It's getting there.
Get priced out of the market. Yeah, I mean, you're, decent, a little junky house in Sugar Land is $300,000, and it rents for $1,800 a month, maybe $2,000. I went and looked at who's got the highest,
and you're paying a 7 to 8% interest rate if you're doing it as an investment.
Yeah. So and it's wild.
It's a break even if you're lucky.
Yeah. So then I looked at the entire MSA and I ran some queries and I was like, all right, what is the highest rent per square foot, 1,500 square feet and under? And it's really in 2 places where it's really concentrated. The Heights,
of course,
and the Woodlands, the Panther Creek, whatever, Panther's Village, whatever it is, because they've got houses that are under 1,500 square feet.
And they're small lots.
They're small lots, right? So that's the only place where you get this like $2, $1.75 a foot lease. But of course, in the Heights, you're paying.
I was about to say, go buy a house.
Yeah, you're paying $500,000-$600,000.
You're buying $500,000-$600,000 for a 50-year-old house.
Yeah, that's right.
That needs new plumbing and electric.
Yeah, that needs $100,000 rehab, right?
Yeah.
So I used to live in that neighborhood, so it's like, yeah, it's a beautiful house, but that's $100,000 rehab on 1,200 square feet, right?
Yeah, it's crazy. Because it's all historical, so you got it. You can't just go in there and rip stuff apart.
I just can't throw some windows in there. No. And there's none of that where guys will say, oh yeah, we'll just get the work done on the weekends. I'm like, no, it's your neighbors.
Yeah.
Some of those sit on those historic boards and they're like, no, you're not doing that. You're not doing that.
And they will call on Monday and say, hey,
that's right.
These bozos are next door over here. We're doing some stuff.
It's like, they all got brand new windows. Well, how can you tell? It's like, because they don't look like anything else in this neighborhood, right?
Or they don't look like any of the windows in the back of your house.
That's right.
Yeah, that's no, and and maybe Panther Creek.
You can get them under 3. You can get them
Panther Creek
300. There's not a lot of them.
No, because they're small.
Yeah, it's super small. Yeah, there's 1,000 square foot. They're selling for $275.
It's crazy.
Yeah, it's absolutely wild.
And then you're getting $2,000 a month in rent.
Yeah.
So you could buy a 1,500 square foot 3-bedroom 2-bath house, which is small, in Panther Creek for probably $350, $325, and you can rent it out for $2,700, $2,800.
Yeah, somewhere around there.
So that's the only place in the Houston area that makes sense to even buy a house and rent it.
That is the closest rent to value. We're looking at it from a cap rate standpoint. That's the closest rent to value you're going to get anywhere in this marketplace. It's literally in the Heights. Well, square footage is in the Heights, but rent to value is in that Panthers Creek area up in the Woodlands, and that's it, dude. Like it is wild. And there's certain
you can find one-offs, but it's
you can find one-offs here and there. You can find them in Sugar Land. You can find them in
Cypress will have them.
Cypress will have like a teen little house that somehow rents for $2,000 a month.
Yeah,
but
because it's in a neighborhood where it's 1,500 square feet and everything else is 2,000 plus.
Yeah,
right.
There's a neighborhood in Tomball. I flipped a house in Northgate. If you've ever been up there before,
yeah.
It's one of the first houses I flipped. 4,000 square feet. Next door, 1,500 square foot house. Weirdest little neighborhood. Because usually you don't find them.
No.
Now they'll put the smaller house in the small house section, the medium size house. Like they're a little bit better at that. But I will never forget Northgate, North Point, whatever.
Northgate. I think it's right.
I think it's Northgate. It's right off the toll road.
Yeah, I think it's Northgate.
And so they had this monster house. They had this little one like next door.
Everybody's like, "Oh, I like your guest house." That's not the guest house. That's the next door neighbor.
Yeah, that's the neighbor. I mean, it's just a big box, right? I mean, the big boxes up there. But anyway, when I sat down and looked at it yesterday, I'm like, dude, they're gone. Like the rentals are just gone.
People ask me, they're like, "Oh, so you own, around 27, 20, 30 houses." I don't remember exactly. And by next week, I'm going to look and see exactly how many I own because I keep saying I don't know how many. And people are like, oh, so all in Houston. I'm like, no, I own 2 in Houston.
Yeah.
Like, you own 2 in Houston? I'm like, yeah, I own Texas City, I own Navasota, and now I own over in Port Arthur, Beaumont area.
Yeah.
I said, because I went to Texas City because you could buy houses for $50,000, rehab them for $15,000.
Yep.
Pre-COVID. And you could rent them out for back then $1,100, $1,200 for that house. And it made 100% sense. And so I started buying down there. And unfortunately, it was just starting. So I was buying 1 or 2 a year. And then once we got to 2019, 2020, all the houses down there went to Houston prices. And I left. And then I went to Navasota, and the same thing happened. And now you go up to Navasota, and you can't buy a house up there for under $250,000, $300,000. And so I've moved out to Port Arthur, Beaumont. And it's getting far. You have to go farther and farther and farther away from Houston to find housing that is really, in my mind, flippable into a rental property, right?
Well, just think about some of your properties, right? So mine over here, my best one, I'm at $1,800 a month. So $1,800 a month times, taxes are $4,500, insurance $2,500, HOA $750. What am I missing?
All right.
Well, I'm just looking at like the cap rate.
Yeah.
I'm in it for 110 divided by 110,000. That's a 13 cap.
But
13% cap rate.
But you remember, and I remember, a lot of people won't remember this. Pre-COVID, you could buy stuff all day long, 15 and 20 cap.
Oh yeah.
All day long.
Yeah.
Like if it wasn't a 15 cap, why are you buying it?
Yeah, what are you buying it for? And now it's like you're just completely priced out of the marketplace.
Yep.
Unless you're paying, you're not mortgaging it unless you're putting a big down payment down or you're paying cash. Yeah, paying
and then you're just like, okay, I'll pay cash and I'll make my 7-8% returns.
Yeah. Well, you get the appreciation, right?
But Houston was one of the only markets pre-COVID that you actually cash flowed.
Right. Yeah.
I remember you talking about that so many times where you're like, guys, when you go talk at events pre-COVID, you'd be like, guys, you don't realize you're one of the very few major markets in the United States that actually cash flows a property. Most people buy properties pre-COVID in every other market for equity and tax write-off. It was for tax write-off and equity. It was not for, you were hoping to break even.
Yeah, that's what I said. And I sat there and looked at it. I'm like, look at our other markets, right, that are bigger than us. LA, New York, Chicago. And you look at their price per square foot. And I said, guys, it's only a matter of time until we get there. It just we're
Dallas was already there.
Dallas was there. Austin was there. Like San Antonio will be that last market, right? And Corpus Christi will be behind, but it's really a tertiary.
It's very tertiary,
market, right?
It's like Beaumont, Corpus, Beaumont. You're gonna be able to buy there for 5-6 more years. at least maybe for a lot longer than that, and still get rents that are going to justify buying houses.
Yeah.
But I mean, you can look at the Corpus market and you can go down there, and I mean, it's so funny. People go, yeah, you just can't find stuff to buy. I said, well, if you're looking in Houston, I said, but if I go down and look at Freeport, if I go down and look at anything that direction, Victoria, Corpus, I'm like, if you just drive an hour and a half, Corpus is a little farther than that, but Victoria, Freeport area, you can find stuff all day long to buy to flip.
Oh, absolutely. And they're like, well, I don't want to go that far out. Right. It's like, well, okay, then you're not really
interested
in doing real
no,
estate.
no. Because let me tell you, I have a brand new truck that I bought at the last week in 2024. I have 21,000 miles on it.
Yeah. Yep.
Why? Because I drive freaking to Port Arthur, Beaumont, Navasota, everywhere. I'm like, wherever the deal is,
yeah,
I'll freaking drive over there.
I bought mine in February of 23, and I'm about to 50,000 miles on it.
Yeah. If you ain't driving 20, 25, $30,000 miles a year minimum, you're not really trying to invest.
No, you're not. You're, yeah. If this is a, I want to sit at home thing, then buy the house down the street, put half down, or pay 100% cash and rent it out.
Yep.
Like it just, you're going to be outside of the major metros. And I don't think that's going to change anytime soon. I was looking at a lot of the economic data. I'm like, how do rents increase they need to increase by a third.
Yeah.
I mean, that's the crazy thing. Either rents increase by a third or real estate prices crash by a third.
But how are they going to crash?
They're not by a third.
Well,
even in 2008, they only went down like 8%.
I was about to say, I don't even see them crashing by 10%, 15%, because the market's just not, I mean, it's not saturated enough yet.
Yeah.
Right. And there's still enough housing.
Yeah.
We're still short housing.
Well, so my comment is always on a lot of this stuff. I'm going back and forth with the guy that owns Reventure. And I'm like, hey, all the charts and stuff and the data you have is great, but your conclusions are wrong. And they all get kind of fired up when I say this. I'm like, what's the median home price? United States, it's, I don't know, $400,000. I think in Houston, it's like 3 and some change, right? Okay, median means the middle.
Right.
That's statistically what it means, right? So when there is a decrease in prices, is it a decrease from the prices below the median or above the median? And typically it's the ones that are above the median, right? Which you ain't buying as an investor anyway.
No, who's going out and buying you know what? I think I'm going to buy a $700,000 house and rent it out for $4,000 a month.
Yeah, and it just
the only reason you have a house that you're renting out for more than $3,500 a month is because you owned a house and you decided you were going to rent it when you moved out.
Oh yeah.
No one's out buying houses to rent for $3,500. I mean, I have 3 or 4 in my neighborhood, maybe a little more than that, but I know every one of them moved out, and because you can go in the MLS, you can see they had it in the market for 6-9 months, and then all of a sudden they went for rental.
Yeah.
Right. Because they were like, I'm not selling, I'm going to rent it.
Yeah.
And pre-COVID, with all the oil and gas people in and out of Houston all the time, you'd have guys that come here and work for 2 years. They all rent it.
Yeah.
And so
I got a buddy of mine on my barbecue team. He's from Austin. He's he's an IT guy, and he and his wife got moved down here. And I was like, so what'd you do? Did you sell it? He goes, no, man, I didn't sell my house. And he goes, and it turns out to be one of the best decisions I made because prices went banana. Even though Austin's in this kind of free fall, their prices are absolutely insane.
Yeah.
So he's like, we couldn't afford that house now. I said, my wife and I, we put it up for rent. He said, the house somewhere now we rent. They're in Siena down the street from us.
Okay.
And he's like, we just rent. Like it makes total sense. And they're renting probably a $600,000 house for about $3,000 a month for literally what? A third of that is probably taxes.
Yeah.
So
it would cost you $4,500 or $5,000 to own that house a month.
Oh yeah, easily. So he's like,
you have no upkeep. The dishwasher breaks, you call the landlord.
Yeah.
Right. The landscape sprinkler system stops working, you call the landlord. Right.
Hey man, your sprinkler system's
not
working right.
Yeah. I mean, and the only reason probably that landlord has it is because they did the same thing.
Yeah.
They bought it for $250,000 or $300,000, and 4 or 5 years later they moved and they said, you know what? We'll just rent this out.
Yeah.
Right. So it's a $600,000 house, but their basis in it is $300,000.
Yeah.
He's probably got a note on it for $2,200 a month. And he's
Yeah.
renting for $3,000, $3,500, right?
Yeah.
So
Making a little bit of spread, keeping
Yeah.
the house, like it all works out.
because there's nobody over there buying $600,000 houses and
No.
rent for $4,000 a month.
Although I met a company, they called me and they said, "Hey, would you come work with us and help raise some capital for us?" And I'm like, "I don't know. Let me have at least have the conversation." What did he say they were at? Oh, 25 million in assets. And I'm like, "Oh, well, how many houses do you guys have?" It was like, "Oh, about 30, 35." And I was like, "What?" So I'm talking to the operations gal, and she goes, "No, no, I started asking her a bunch of questions. No, you can talk to CFO." So I talked to CFO. And he said, "Yeah, man, our houses are $800,000. We got a mil plus." And I'm like, "Where are you doing this?" And he said, "Dallas, Plano."
Yeah,
I'm
okay.
like, "Okay, now I understand your business model now."
Yeah, they're buying high end and renting into
Really?
high end people.
Right. And so
We know a lot of those professional athletes now are renting.
oh, I didn't know that.
Yeah, they're starting to rent because they come in. The ones
They
that come in
move so damn much too.
Well, they come in, they sign a 2-year deal
yeah.
or 1-year deal. They come inside a 1-year deal. Why are you going to go freaking buy a house? You're probably going to be at your 1-year deal. You're probably going to be gone.
Right.
You sign a 2-year deal, even a 3-year deal. Like if I'm a professional athlete, why would I go buy a $1.5 million, $2 million house when I'm probably moving in 3 years, right?
Yeah.
And who knows? I might lose money on the house. Why wouldn't I just want to go rent? And I probably have a house in wherever I originally started that played it for 5 to 7 years the first time around. And I already have a house there, and that's where I live.
Yeah.
Why am I going to go?
Well, a lot of those guys live in Texas anyway, right?
They do because of no taxes.
Yeah.
Though now they hit them now.
Oh, yeah.
So yes, these states have gotten wise to that now.
Yeah.
So most of the states, if you earn money in their state, they still hit you for taxes now. So it's they got around. Matter of fact, for golf,
yeah,
when they win money in a state, they have to
they
pay
pay it right there, huh?
and they pay their own.
Oh,
so you live in California, and you
hammered?
go over to Illinois,
Mhm.
and you go to Chicago and play the Chicago Open, and you win first place, and you get $2 million or $2.5 million, whatever it is. You pay the taxes in Illinois,
and then you pay
again in California.
Well, that's always the joke. Like all those guys live in Florida, right?
Yeah,
that's nuts.
or Texas. A lot of them live in
Texas
Texas.
or Florida. Yeah,
A lot of them live. Man, I was surprised. There's a lot of them. There's several of them live in the Woodlands and up in and up in Dallas and Austin, and there's probably 20, 25 professional golfers live in the state of Texas.
Oh yeah, easily
or more.
Easily. Well, and that's always why the golf course is so nice here, right? So it's like those guys are out here playing.
Well, that was funny. Like Scheffler, Scott Scheffler lives in Dallas in Highland Park, and so they played the Byron Nelson. What was it, 2 weeks ago?
Yeah.
And he smoked the field by like 10 shots, right? And I'm like, well, this is not fair. That's his home course.
His backyard.
He's the number one golfer in the world.
Yeah.
And you're playing his home course,
Yeah.
right? Like he's hit every shot and played every putt on the course you could possibly do, right? Like, I'm like, that's not even fair. That's not even fair to anybody else, right? That's so stupid.
And he's like, you guys know I play 36 out here every day.
Right? Yeah, exactly.
I'm not somewhere else, right?
Exactly.
It's funny. But on the tax thing, you look at California and you're like, man, I love it out there, but man, I don't know how you can live out there. I mean, you've got to get paid. There was a
oh, you know what? It's my sister lived out there for years, and I remember going to visit her one of the first 2 or 3 times. And we went to Fashion Mall, which is the high end mall out there, and I think it's in Newport. It's right there it's on the in Colorado side, California. And so, anyways, we roll up, and they have valet parking, right?
Of course.
Before there was valet parking at malls,
Yeah.
now there's valet parking at malls. But it's all Bugattis and Ferraris and Lambos. And then the parking lot are Hummers and BMW 6 Series and Mercedes,
Those are all the kids' cars.
Right. Well, and I'm looking around, I'm like, oh my God, there's like $50 million in cars in valet.
Yeah.
Right. And then every car in the parking lot's worth, this is 15 years ago, but back then it was, $100,000 plus, which was today $150,000, $200,000, right? I just looked at her, I'm like, how does everybody in California afford all these cars? She goes, oh, I bet you 90% of these cars aren't even owned. They're all leased.
Oh.
She's like, no. Everybody in California rents their house and leases their cars because they can't afford to buy a house or buy a car.
Yeah, that makes sense. Well, and if it's a business expense, you write it off, right?
Yep. But yeah, she's like, no. Everybody out here is pretend rich.
Oh,
That's what she called it, pretend
Pretend
rich.
rich.
Yeah. She
That's
goes, yeah.
funny.
She goes, she goes, when you meet people out here and they're all wearing fake Rolexes and Gucci's and they're all driving cars that are leased and they're
That's pretty
living in
funny.
houses that they rent. And I'm like, well, that makes more sense why all these people are driving all these high end cars.
Yeah.
It's like, yeah, they're trading them in every 3 years.
You know what's so funny is even down here, most guys that do pretty well, everyone drives a truck and all that stuff, right? And I can never really, you can kind of tell because you work with a lot of these guys, you start to tell after a while, like this guy does pretty well. But then when you see their wife, that's usually when I can tell. I'm like, oh yeah, this guy does pretty good.
Yeah.
She's got just really classy, but you can tell like this is.
Yeah, she's got a Louis Vuitton. She's got the rim bottom shoes on.
Yeah.
All right. Yeah, he's
like,
doing well.
Okay. Hair's perfect all the time. You're like,
yeah.
he may look like a plumber, like literally just got off a job, but she does not, right?
That's usually the rich guys do.
Yeah.
Like, yeah, so many of my friends that have some serious cash people meet him. They're like, really, that guy makes a lot of money? I'm like, yeah, I know, it's hard to believe. But yeah, he'll go out and drop, $6 million on a jet, but he ain't dropping more than $15 on a t-shirt.
Yeah, that's right. He's like, that t-shirt is how much? I don't think so.
Yeah. One of my buddies who seemed like that, he was joking with me one time about, God, you always wear polo t-shirts. It's so expensive.
Are you serious?
Yeah, I'm like, I don't know, like $25, $30 for a t-shirt, but
So I get these now from Costco. And I literally, these are what, Callaway?
Yeah.
I got these for like 15 or $20. I just go in there and I just grab a bunch of them.
Well, China had that, the increase because of the tariffs. They're gonna be a little more now.
Yeah, they're gonna be like probably $17,
yeah,
$22.
All those people over there got a raise. They're all making $1.10 a day.
Yeah, that's right. I think so funny about this whole trade thing, and I can't keep up with it. And this whole thing that went down in Dubai and Qatar and all that, I'm like, this is absolutely insane. But I'm sitting there watching this whole thing, and I'm like, oh, do we really want to make T-shirts here in the United States? I mean, do we really? We don't want to do any of that stuff.
We can't afford to make a T-shirt here in the United States.
I don't want to make a T-shirt here, so I'd rather just have somebody else do it, right? But and I'm watching God, did you see the Treasury? I think it was 20-year, the 30-year popped up above 5%. Let me see. Let me pull up. I keep telling my parents, I'm like, let's take a look. Let's see, we got bonds and rates. All right. Yeah,
how are we going to make T-shirts here and pay people $15-20 an hour to make a T-shirt, right? When in China, literally, they're making 25-50 cents an hour.
Yeah.
Right. Like, or even if they're making $1 an hour, like you just can't compete. There's no way to compete with that. That's why half our crap comes out of China, because it's all child labor, right?
Dude, check this out. You have a 1 month maturity at 4.3 all the way to a 30-year at 4.9. And it's absolutely insane.
Yep.
And a 30-year treasury at 5%. And what's crazy is how many of these buildings are trading at 5 and 6%. 5 and 6 cap. Like it doesn't make any sense at all. I keep telling my folks, I'm like, hey, move a couple of bucks over these treasuries. I think they're only going to get more expensive, but or the interest rates are going to keep going up. But yeah, even the gilts, the UK bonds are 5.4, and the bunds, German bunds are 3.1.
I mean, I just look. So at my company, we end up with cash, a bunch of cash in our account sometimes, and so I finally went out and opened a money market linked from our bank. Right? They're giving us 3.25.
Are you serious?
Yeah.
Did you ask them about sweep accounts? What are sweep accounts paying?
Yeah, but so I have a real good friend of mine that does sweep accounts and all their stuff. They're doing sweep accounts. But here's the thing on a sweep account: unless you're sweeping significant amount of money,
it's got to be a lot.
7 figures.
Yeah.
Right. You got to be sweeping 7 figures. We're not sweeping 7 figures yet, right? We're sweeping, I don't know, $300-400 grand, right?
Yeah.
At $300-400 grand, you like I remember him telling me what it was to break even, but it's like $250,000 a year because there's fees associated with it. Right?
Oh yeah, yeah.
So you got to be sweeping like $250,000 an average a day.
Mm-hmm.
That's a break even.
Yeah.
Right. So you better be sweeping millions of dollars. So for me, it doesn't make any sense. So we move, $250,000, $400,000 over, and then we need some money. We move it back and kind of thing. And it's kind of and we'll make an extra, I don't know,
like $15,000-20,000 bucks.
Oh no, I don't think it's that much.
No,
I bet
think so?
2 or 3 grand. but it's better than zero, right?
Yeah,
Like,
yeah.
I mean, I kind of did the numbers a little bit just back in the napkin. I want to say that I figured it might be about $3,000, but because again, we're not moving millions,
Yeah.
right? I wish we could.
We had a conversation pretty early on about sweep accounts because our construction company, like the float that was in the
Oh, I
construction
bet.
company,
Yeah.
it was significant. And then one of our funds, we actually set it up for one of our funds. And I think we kept a balance of about $1 million until we finally started really drawing down that last bit of a balance. And it wasn't much, but it's, something, right? It offset some of the holding costs for some of the stuff that we had. So it made sense.
No, that's No, and it's who knows where we're going. I can't believe the Fed kept rates flat. Like I think everybody was a little shocked on that one.
Yeah, I think that. Well, when that CPI came in, and it's funny when the CPI came in, and then the rest of the data came in yesterday or today. When you look at it, are we experiencing a shrinking economy on top of this trade war, and it masks the trade war?
Yep.
Because prices are definitely going up, right? I mean, you could see it. So I think we'll know more by June. And quite honestly, I think the reason there was this pause is because the bond market is absolutely going to break the United States. Like if deals don't start flowing in, or something doesn't start changing, the bond guys will. It's so funny. It's like I keep telling everybody that are not finance folks. It's like, I don't think you understand. Like, no one gives a shit about the equities market. Like, no one cares.
No, not the real people.
No, not real money's not in equities. It's the foreign exchange is the second largest that can really move things around. But I said the bond market is where it's at, and you could starve countries on that. Like you could produce a famine, with a run on bonds. So, and then we've got probably one of the best bond guys sitting at Treasury right now in Bissett, right?
Yeah.
I mean, they broke the Brits with it. So I think there was another one of those late night phone calls where it's like, hey, you better call China right now and figure something out. Like there needs to be a pause or something, because this is not. And the crazy thing is, it still hasn't stopped.
No, it's going down and down and down and down. Yeah.
I mean, it's down a little bit today, but dude, these bond yields are getting out of control.
Yeah, I know. I mean, when you can make a 5% return,
5%. Yeah, I can remember.
I mean, golly, I mean, if you're either close to or in retirement, why wouldn't you move all of your stock into bonds right now?
Yeah, I like I said,
who doesn't want to make a 5% return? I mean, that's a phenomenal guaranteed return. I mean, almost guaranteed. I mean, it's not 100%, but it's 99.9% return.
It hasn't failed yet.
No,
right?
but if it keeps going, it might.
Yeah, it is absolutely wild. I can remember back when I was having retirement conversations with my grandmother, and back in the day, the goal was save a bunch of money, invest it, and then go put it in U.S. Treasuries.
Right.
And you'd get 7, 8, 9% return. You get $1 million.
Yeah.
You're getting 8% return in retirement, and your house is paid for, making $80,000 a year, and your money, and that's risk free.
Yeah.
That's a risk free rate of return. It's risk free, and you're doing pretty darn well. So it's funny when I see these treasuries start to pop up at a 30-year. I mean, shoot, what
5%?
Yeah. Excuse me, here's the highest. Your highest is 4.934 for a 20-year. But you can go down if you take let's say 100 basis point hit, you can get a 3, 5, or 7-year right around 4 and some change. So you cut off that long tail interest rate risk at 3 years, but you're making 4.1 on your money guaranteed return. Man, that's not bad, especially with all the crazy stuff that's going on. Yeah, if you look at the long tail risk, when you start jumping up to 5, 7, and then the 7 to the 10, it's like it just doesn't make sense. But it is interesting that 20 years at 4.934 and 30s at 4.91. So yeah, I don't know, some of these guys, when I look at what they're doing, and I'm like, man, you could just put that in the treasury and sleep on it. Like you could
make a better return.
Make a way better return.
And you have zero risk.
Zero. Yeah. Zero.
Well, maybe not zero, but really, really close to zero.
Really. I mean, it's about as close to zero as you can get.
Right. If this fails, there's a whole lot of more
Yeah, if this fails, you're not going to have to worry about your money market account. 'Cause
No.
it's gone. Like literally everything will be gone.
Yeah.
It's my joke is like when it gets to this point and then this fails, we're going to be trading lead and brass. Like we're not going to be trading Bitcoin and gold and all that nonsense, right?
Yeah, you're gonna be trading, yeah, for sure. You're gonna be trading gasoline and bread and eggs.
That's right. It's gonna be Mad Max time.
Yeah, it will be. It will be. It will be.
I keep joking. I'm like, we need to put a chicken coop in the backyard.
Man,
when Armageddon happens.
My wife would love for step chickens. I'm like, I'm pretty sure HOA would not be okay with that.
Dude, I'll tell you, I was one of my first houses I flipped was in Westbury. In the older sections of Westbury, it was that little chain link fence. It's like 3 feet tall. So
Yep.
I kid you not, if I got there early in the morning, one day I hadn't done the backyard yet. So we're fixing the whole house up, right? And I walk into the backyard. I'm like, is that a chicken? And this neighbor, she's probably since passed away. She's 1,000,000 years old, had to be in her 80s. She had chickens back there, and her chickens would jump over into our backyard and then go back there and eat their little bugs or whatever those little chickens eat. And I just thought, man, wouldn't it be cool to get some chickens?
No, it's dude in Texas City. I have a house literally next door. The guy owns a house. There's a lot between me and the next house, and that lot, the guy next to on the other side of it owns it, and it's chickens.
No
He's got a 3-foot chain link fence around it.
Yeah.
And he probably has 20 chickens and a rooster in there. And and I come over there sometimes, and there's chickens in the front yard, chickens in the backyard. There's free range chickens.
They eventually make it back to the coop.
They know where their nest is.
Yeah.
So they just free range until
just walk around the yard.
Yeah. I'll tell you what though, man, that rooster is mean, dude.
Oh yeah?
Yeah. One time he came at me. I was like, what the hell?
Yeah,
he protected his hens, man. He didn't want me to get one of his hens.
That's right. Don't come after my ladies.
That's right.
Yeah, this is real estate, folks. It's chasing chickens off your project.
It is. There you go. Yeah, but it's not just you don't have to worry about just plumbing, electric, floors, and paint and
yeah, you got chickens.
You got chickens too now.
But dude, there was a gal, they had sent me, a buddy of mine was buying, and they had sent me the listing, and she had an alligator. Was it you telling me this story? Had a pet alligator in the house.
What?
So they had a like a baby pool.
Yeah.
Like in the living room. And they had like a
full-grown alligator.
Yeah. And they had like a little doggy door underneath the window. Somehow they cut this opening up. It was a pier and beam house. So they cut open underneath the window and then on the floor, like they cut this, and it would come in and out of the house. And it would stay like in the living room in this little pool.
There's no way, dude.
I have the picture somewhere. I've got to find it.
Yeah, until that alligator wasn't fed enough, and then
I guess I don't know, but it would.
You became
the house. Who was telling me that story?
I mean,
I saw the pictures. I'm like, this is wild.
I've heard of people that have a dogs and the dog bites them that one time. Dave, you wouldn't want that alligator bite you one time.
No, that pretty much ends that little relationship. I'm trying to think, what's the other crazy?
I mean, a chicken pecks you, it's gonna hurt, but it ain't
it's not gonna kill you, right?
Right. Alligator gets a hold of you, man. It can rip your freaking leg off, bleed to death.
We had another buddy that bought a house in the Heights that had to have been used for human trafficking. It had this fence that went really tall, like 10-foot fence, went all the way around it, including this part of the house, right? And so it was on one of the areas of the Heights where they didn't have a historic district and the city really didn't care. This was probably 10 years ago. But I can remember Tom and I were there, and it was a guy he knew. And we walked into the house, and he's like, dude, this is going to be some spooky stuff. I'm like, dude, I've seen. I mean, at this point, we bought like 600 houses. Like, you walk in the house, and they had these cages, and the cages went floor to ceiling. And they were like maybe a quarter of the size of this office, right? Like you could tell just big enough for a human.
Like 3x3, 4x4.
Like 3x3, 4x4. And then it went all the way to ceiling because otherwise you just climb out. And they were all in the corners. There must have been 20 of these things, inside, outside. Wow. It was wild. And so I'm sitting there, and they didn't tell me what I was going to see. I just walked in, and so I looked at his buddy, and I was like, "Is this what I think it is?" He goes, "Yeah, I think they use it for human trafficking." He was buying it. He's a part of some church. They were going to renovate it and do some church thing with it. And I was like, this is wild. I've never seen this before.
Wow.
Yeah, it was crazy. I've seen those houses over there by off of 59. And there was I don't want to tell too much of the story because a lot of this is private stuff, but I will tell you this. There's a group that was buying houses it was part of their business, we'll put it that way. And so they would go in and buy these houses, and a lot of these houses were how can I put this? Used for
Brothels?
Brothels, yes. They were used for extracurricular activities, right? So every room had a hot tub in it, like, and had all these crazy colors and heart-shaped beds and like all that crazy stuff that you see. And they said every time we buy one, we'd go over there and look, and sure enough, here it is. Like, and then you have to, of course, renovate it and all that.
Yeah.
It was
take all the hot tubs out.
Yeah, take all that out.
Wow. But you know, you do our business long enough, you
you see all this. You see
plenty of stories. Plenty of stories. I remember the first house I bought, which I renovated myself because, you know, like everybody's first house, you're terrified of what did I just do?
Yeah.
Right?
Oh yeah.
Like, and if you're listening to this and you haven't bought a house, you're terrified, you gotta jump off the cliff.
Just do it.
You just gotta do it. It's like when you're a kid and you're jumping off the cliff in the water, and it seems like it's 40 feet tall, even though it's only probably like 10 or 12.
Yeah.
And you're like, there's no way I can do this. And then you do it one time and you can't wait to do it again.
Yeah. Yeah.
That's what's like buying houses, right? The first time you go to buy a house, you're terrified. You're like, what am I doing?
So when you're in the closing and you're looking at how much debt you're signing up for, that was I was like, whoa, 75 grand.
And you look back at, like, you know what's funny? I look back at my first one I bought, which was $52,000.
Yeah.
I thought, oh my God, what did I do? This is nuts, right?
Yeah.
I look back at it now, and I made enough money back then. I could have owned that house and never did a damn thing to it.
Oh, yeah.
Forever.
Yeah.
And you know what it affected? Hey, honey, we can't eat out every night. Right? Like,
we kept, it was so funny. I paid $71.5. It was over there at Remington Ranch on Verde Trails Drive. It was a foreclosure. It was real simple. Those are Hardy boxes over there, if you guys are familiar with that side of town.
Yep.
So it just needed paint, carpet, and some
light fixtures,
that sort of
countertops, kind of thing.
Yeah. So bought it for like 71 grand. I think the rehab was $8,000 or $9,000. But
that was mine. Mine was 8,500, 9,000. Yeah.
But
I remember I was all into it for less than 60.
Yeah.
I was like, yeah.
But I remember I was so worried. We were big Dave Ramsey folks. And so I'm like, I used to have at least 12 months of expenses sitting in our checking account. I'm like, well, it was like 100 grand just sitting in the checking. That's all we do. That was just leave that there. And I'm like, why am I so freaked out about this? Like, I could just pay this thing off.
Pay cash for it and walk away.
Cash for it and be just fine. And so that's what.
But you're terrified.
Yeah, you're terrified, and you're like,
until you get done and you rent it and you have revenue.
Yeah, and then the rent's coming in,
and then you go,
what was that? What was that?
Wow, that was easy.
Yeah,
right. And that's, I mean, I think if you talk to any investor who's done this for long enough, that's everybody's first.
Yeah,
I remember I went over there after work because I was working a full-time job every night, and it was in Texas City, and I went over there every night until 10 o'clock at night. I got home to my house back up in Cypress at 11:15, 11:30 every night. Went to sleep, got up in the morning at 6:30, went to work.
Yeah.
And I did that every day. And I worked every weekend for almost the entire month to get this thing renovated because I was terrified that I had this, got it done. So, and I got it done fast and ran quick.
Yeah.
And now I look back and go, that was crazy. I could have.
And now,
why did I kill myself trying to renovate that house?
But you know what's funny is
nowadays, like the ones I buy now, my guy, he works, like he called me today and said, you know, I think I'm not going to work until Tuesday. I'm like, that's fine. Yeah. And he works, 5, 6, 7 hours a day. And it's him by himself. And we take 2 to 3 months to renovate a house.
Yeah.
And I don't really care. Right? Like,
it's fine. It's I remember that driving up there, watching it. Like I mean, it was a hands-on. Did the same thing. I think I rented the carpet cleaner and did because some of the carpet we could save, some of it we couldn't. I remember doing all that stuff, touch up paint. It had laminate countertops. We didn't replace the countertops. We did the old classic cutting board.
Yes.
So this is like an old school, they burn a hole in the laminate, so you just glue a cutting board to it, right?
Exactly.
So I was telling that story at that seminar I was doing not too long ago. And I'm like, it's a classic thing. You can get away with it for one turn, right?
Yeah. And
then you got to replace the countertops at some point. But yeah, and then I sold that one to another investor, if I remember, a couple of years later. But yeah, it's pretty funny. You start off that first one, you're freaking out.
By the time you get to the second one, third one, by the time you get to the third one, you're like,
this is not that big a deal.
This is so easy. Why am I not?
Yeah, why wasn't I doing this earlier?
Yeah.
You know, it's funny. It's like when I bought that, when we bought our first building, I was a little freaked out. I was like, well, let's see how this one goes. But I also had some pretty experienced guys with me, which just made it super nice. Because it's like they were like, no, this is how it goes. You know, take a little while, rehab, just everything's more. The joke I have in commercials, it's just like residential, just add a zero.
Yep.
Like we had to replace two, are they
And double the time.
Yeah, double the time, right? We had to replace two. Are they 18-ton units or 15 tons? They were 40 freaking grand. It was in the middle of COVID.
Yep.
And there was one in Louisiana and another one in Oklahoma. We had to ship them in. It was such a pain because nobody's working, right? So of course, that's when your really expensive air conditioning units go out. It's right in the middle of that nonsense. So, but anyway, all right. I think I don't know. What do you think? We've done enough BS on the BS. No
BS. Like we have.
All right. Well, thanks for listening, guys. And I promise at some point this will be more professional, or maybe not. Who knows?